Hello, everyone. Welcome back to the Blockware podcast. We have a massive episode today, really big episode. I'm excited to talk to Jesse Myers. Jesse, welcome to the show.
Thanks for having me, Mitch.
I've been following your work for a long time, and I thought this would be a great place to start. This is one of the most popular charts I've seen in the Bitcoin world, period. And I think it does a good job illustrating just how early we still are to Bitcoin. So for people just listening, we're looking at the total addressable market for Bitcoins, which is all of the different store value assets in the world. We've got Bitcoin with a $2 trillion market cap, real estate with close to 400 trillion, bonds with 300 trillion, equities with 135 trillion. And I kind of wanted to go through each of these one by one and see where you're at and how much market share do you think Bitcoin could capture from each of these different buckets? Let's start with gold, because I think that's the most apples to apples comparison.
Yeah. Okay. That's fun. So the original reason I made this chart was because I wanted to do the same exercise that you're sort of teeing up now of like how much is in scope for Bitcoin, how much value is in scope in terms of total addressable market for Bitcoin. And that made me go through the kind of the thought process, the exercise of, okay, well, what is out of scope? And the reality is like kind of nothing. Nothing's out of scope for Bitcoin in terms of value in the world, because when you really think about it, all value in the world is just looking for the best place to park itself. Like investors are looking for the best place for their money, for their capital. And of course, we have a diversified approach to that. We put it in various buckets to mitigate risk and all that, but you're just looking for the best place for your money. And so in that sense, wherever money is, wherever value is stored currently is in scope for Bitcoin. That was kind of the starting point for this analysis I put out in 2023. But really it had been a couple years in the making. And then the second part of that was I was kind of stunned that I couldn't find numbers for like how much value is out there. How big are these buckets from a top-down point of view? And especially in the bond market, the fixed income market, when you search that on Google, you get much smaller numbers, because the numbers that you get are kind of capturing like a subset of that, like the sovereign debt and corporate debt subset of all fixed income value out there. But if you search for like how much debt is out there, and all debt is bundled up as somebody else's asset, basically somebody else's bond that they hold, well, then you get a much bigger number, this like 300 trillion number. So I spent a couple days really hunting down good data points to put together, to triangulate top-down numbers for each of these buckets, and try to make sure they were MISI, it was mutually exclusive, collectively exhaustive, which is a term from my management consulting days. And this was just kind of like a classic management consultant exercise to get a starting point of like, okay, here's how much value there is. Here's how much value is in scope. And then you can proceed with the thought process of, okay, so if this is what's in scope for Bitcoin to take market share from, well, how much market share will Bitcoin take from each of these buckets? Mm-hmm. And that part's kind of subject to anybody's intuition or personal feelings about the strength of these assets relative to Bitcoin. But when I went through that, I forget my numbers, but I went through and I determined, what percent of the value sitting in each of these buckets I think would eventually migrate to Bitcoin, under the assumption and the understanding that Bitcoin has superior properties as a store of value asset than any of these buckets do. And that's just because it's a digital perfection of what a good store of value asset is in the analog physical world. So I actually forget what I said for gold, mm-hmm. but and that's actually the trickiest one too, in a funny way, because you can think about it as like, I think that Bitcoin will steal market share from gold in terms of hard assets, hard money assets.
Mm-hmm.
But I think that gold is set to, have a resurgence relative to these other assets, because if you look back at in 1980, the total value of all equities in the world and the total value of all gold in the world was both, I think it was 1 trillion for both of them. So they were at parity, right? And now equities is much bigger. I guess this is like 6x. A few years ago, it was 10x bigger. So since 1980, equities had grown 10x relative to gold. They had both grown in nominal terms, but equities had grown much more. So I think that gold is actually kind of poised to do very well in this sort of background context of sovereign debt levels and the necessity of money printing looking forward over the next decade or two. Mm-hmm. So I think gold will do really well. However, I think that Bitcoin will do much, much, much better. And I think that as a relative share of the like hard money group, it will, right now it's, I guess that's like 1/12 of the total. Mm-hmm. Bitcoin's 1/12 of the 2 plus 22 trillion. And I think that'll shift. It'll eventually flip, I think. And Bitcoin will become, worth 10 times more than gold. But I think there's sort of there's a bear case, a base case of Bitcoin will, I think, has a layup to eventually reach parity with gold. So I think that's kind of like, the easiest thing to point to when somebody's new to Bitcoin or doesn't understand Bitcoin at all. You can say, well, here's how much value is in the world. Here's this tiny little thimble that's Bitcoin, and it is digital value. And everything else in here is analog physical world value. And we live in the digital age. So will Bitcoin stay 0.2% of global asset value? Or might Bitcoin as digital gold at least match gold and 10x grow from here? So there's some thoughts around your question. I don't know if you...
Yeah, that was great. I think there's a lot of threads we could pull on here. I mean, one, I definitely agree. Like Bitcoin capturing gold's market cap is like bear case. That's the lowest bar. And it actually gets me excited because gold's up 34% or something this year.
I do need to update these numbers now because gold is much, much larger than I made these like 4 months ago, and it's much bigger now.
Right. And on the updating, I mean, I remember when you posted this a year or two ago, it was $900 trillion worth of stuff. And now it's 1 quadrillion, which is just an unfathomable number. And,
yeah, that was 2 years ago. And that, that it's important to remember for everyone out there that it's not about the world got richer. It's not that, we got $100 trillion richer. It's that the dollar shrank in terms of its purchasing power. So you need more dollars in order to represent the value held in all these assets. It's not about the world getting richer. It's about the dollar getting poorer.
Right. It's insane. How much do you think over the next couple of years, Bitcoin's market cap growth will come from purely the amount of dollars increasing versus it actually stealing from these other buckets?
Yeah. So Saylor uses this chart, this framework, which is really cool. And he built his Bitcoin 24 valuation model on top of my valuation model from the original article that this comes from, which is Bitcoin's Full Potential Valuation from 2022, early 2022. 2023, whatever. And in his assumptions for, he decided to pick a point in time in the future of like, here's what he thinks 20 years from now. And so he input his assumptions about how the each of those buckets will shift over time and how overall monetary inflation will perform over time. And he assumed that, I think it's like 7-8% growth overall of like true inflation. Mm-hmm. And that for 20 years compounds to a 4x growth of the nominal size of the whole pie. So going from 1,000 trillion to 4,000 trillion. And those are the numbers he landed on. So you could say that, in the next 20 years, Bitcoin will, and all assets will nominally 4x because of money printing. However, of course, the money printing creates the case for change for investor portfolio composition, and drives a disproportionate amount of value away from fiat denominated assets like bonds and money, and towards hard money assets like gold and Bitcoin. And so that will, much more than 4x the value of gold and Bitcoin, I think, and especially Bitcoin, given that we're in the digital age. And that's what's so interesting about, how the numbers have changed in the last 2 years. So, I did my 2025 update from the 2023 numbers, and everything got bigger in nominal terms. But when you factor in that, the total pie was growing at 6% a year, but then bonds were only growing at 3% a year, in nominal value. Well, that means that in relative terms, value was leaving the fixed income bucket. And same was true with the money bucket. And the two buckets that were growing fastest were gold and Bitcoin, like 20% a year and 120% a year for the last 2 years for Bitcoin. So from that, you can see that, like, because of the context, the climate we're living in, value is flowing from the fiat denominated assets that, with the backdrop of high money printing. If you're holding fixed income instruments, if you're holding bonds, you're getting 4.5%, with the 10-year T-bill. But real monetary inflation might be 7%, or at least that's what growth of the M2 chart suggests. That's what Saylor's model assumes for the next 20 years. And if you're holding, bonds, but that's the true inflation rate, you're losing 2.5% of your purchasing power every year that you hold bonds.
Right.
So I think that global capital is waking up to that. And where do you want to be in that climate? You want to be where things did well in the 1970s, right? Which was gold. But really that means hard money assets. You want to be in hard money assets. So there's an exodus going on, I think. And Bitcoin, gold, and especially Bitcoin are the beneficiaries of that. So, so it's compounded. It's impacted not only just by the nominal growth of everything, but because of the nominal growth of everything, you're starting to see like real structural shift in value, flows from fiat assets to hard money assets. And that'll be probably the biggest tailwind for Bitcoin over the next 2 decades.
That makes sense. It's the nominal growth of the amount of dollars perpetuates some of the issues with the other store of values relative to Bitcoin, which increases Bitcoin adoption and allows it to also capture market share. I think this sets us up really good to talk about Bitcoin Treasury Companies. Would it be fair to say that they are the vehicle that actually allows that capital to get from 135 trillion in equities and 300 trillion in bonds into the $2 trillion Bitcoin market?
Exactly. You've seen some of those slides, I guess. That's exactly what I think. I think that, what we've seen over the last 2 years is this sort of osmotic flow of value from fiat assets towards hard money assets. And I think that when you think about what a Bitcoin Treasury Company is, what it's designed to do, it's designed to accelerate the flow of capital from those buckets to Bitcoin. So it really serves as a capital pump that's accelerating that osmotic flow and turning it into a very actively pumped flow of capital from those buckets. And that's true from the equity bucket and also the fixed income bucket. And now with Strategy's latest product, their Stretch product, they're tapping into the money bucket as well to compete with money market funds and do it better than money market funds can, and so you're going to win market share and suck up capital and use that capital to buy Bitcoin. So it ends up flowing into Bitcoin
Right.
through these instruments. So the mental model I have is that like strategy is a water pump with a pipe connecting to Bitcoin and little mini pipes that strategy has placed into the equities bucket and the fixed income bucket and the money bucket, and it's they have created these products in order to attract capital based on what investors in those asset classes are looking for, and because they've created these products that are powered by Bitcoin, they can offer better rates, a more attractive value proposition to investors than what they can get with fiat bonds or money market funds, or even traditional equities that are just generating income from operating activities year over year.
Right. I think this is something that most people that are critics of Bitcoin Treasury companies don't understand. Is it's not just this speculative leveraged bet on Bitcoin. Like, that may be part of it, but it's actually providing a need in the market. It's solving a huge problem, which is these trillion-dollar pools of capital that are underperforming inflation, or they're buying equities that already have PE ratios that just don't make any sense at all. And so they need an alternative, but they can't actually just buy a cold card and buy some Bitcoin and put it on there. They need a different type of product, either with different volatility or different custody setups. And so strategy and all these other treasury companies provide that.
Yeah, this is a topic I'm passionate about. I think there's two big misconceptions here, right? Like, people will say like a Bitcoin Treasury company doesn't do anything, but you're right. Like, this is what a Bitcoin Treasury company does: is it helps to restore equilibrium in global asset distribution by helping to connect trapped pools of capital in TradFi with Bitcoin, and allow that capital to access Bitcoin, and in doing so help accelerate that flow of capital that would eventually osmotically happen on its own, but this helps to facilitate that. And that's a service to global capital. We might not be making a consumer product, or creating the next iPhone, but we are helping to bring capital to greener pastures, and that's tremendously valuable in the world if you think about it, in the high level. The second misconception I've now forgotten.
That's okay. I mean, I think that was really well said. You had a great one-liner. There was they bring equilibrium to capital markets. That's fantastic, and it is solving the biggest problem in the world, right? Because just looking at these numbers, 1 quadrillion, that's the largest industry, right? Store of value is the largest industry in the world, and that those problems proliferate into all areas of society, because every area of society touches equity, base money, debt, real estate, all of these things. And so Bitcoin Treasury companies filling that need, it will have, I would expect downstream positive effects for culture in general.
Totally agree. And you're right. I've talked about that in the past, but I've forgotten that. But Bitcoin's industry is value itself, and you're right that that is the biggest industry in the world. We're stretching the definition of industry here, but that's where Bitcoin is competing. It's not competing in an iPhone industry, right, or like Coca-Cola industry, but it's competing in terms of here's a product for how you can store your value and propagate it into the future undiluted, and hopefully grow its purchasing power over time. And that is relevant to all value in the world. So it's the biggest industry, the most important use case in the world, and Bitcoin does it better than anything else out there. So Bitcoin Treasury companies are the industry to help facilitate that flow of capital. Oh, that was the other misconception too, like why do Bitcoin Treasury companies exist? Well, it's because Bitcoin Treasury companies have access to capital market tools that individuals don't.
Mm-hmm.
And every individual Bitcoiner would love to take out, a $100 million bond, at low interest rates for 5 years and put it all into Bitcoin. But you can't get that. Like, nobody's going to offer you that. But a corporation with a sufficient balance sheet and a track record can get that. And then that becomes, a way to deploy the sort of speculative attack concepts of like, well, I would like to owe somebody dollars and buy Bitcoin and hold it for long enough for those two assets to diverge in their value. And so Bitcoin Treasury Companies, reason for being is to be a vehicle through which individuals can participate in that machinery.
Yeah.
And it's like what you can't do on your own, you can collectively participate in through under a corporate umbrella. And that's the other side of the service, right? It's like Bitcoin Treasury Companies provide a service to capital, but they also provide a service to shareholders of, this is a vehicle by which you can do what you would like to do.
Yeah.
But you don't have the ability to do as an individual.
That makes sense. Yeah, I wish I could issue $1 billion of non-callable, low interest rate convertible debt and smash buy some Bitcoin, but it's just not possible. One of the, in my mind, kind of the Goliath of all of these asset classes is the fixed income market, and it's pretty top heavy as far as I understand with sovereign debt and specifically U.S. Treasuries. If we extrapolate, we've got right now we have MicroStrategy and their preferred equity lines kind of creating their own yield curve and really hyper targeting the fixed income market. If we see this world where Bitcoin consumes a lot of that market, would you expect it to also be top heavy where the strategy preferred debt is kind of the majority of the Bitcoin fixed income world? And then you have a bunch of other companies with their own issues of preferred stock with similar terms. How do you envision that?
Yeah. Obviously strategy is the king. Everybody would like to be strategy, to be clear. It's funny. There's a bit of a paradox here of like, I think there are more compelling companies than strategy. Smarter Web being what I think is the most compelling company in the world right now. But Smarter Web would like to be strategy, right? Like you want to be in that position, but at the same time, if you are on a path to grow faster in that direction, then that's more compelling from an investor's point of view, I think. Because at the end of the day, what an investor should care about is rate of growth first and foremost. But of course, everybody wants to be strategy. And they've pioneered it, and they have an incredible lead, and that lead will not be overtaken. They're going to be the most valuable company in the history of the world. The math I put together on this topic is, I think that Bitcoin Treasury Companies, because of some of the dynamics we've talked about, can and probably will accumulate up to half of all Bitcoin. And using Saylor's valuation model, 20 years from now, that would mean that Bitcoin Treasury Companies have accumulated $140 trillion of Bitcoin 20 years from now. And I think that strategy will constitute half of that. So they'll own $70 trillion of Bitcoin plus whatever premium they trade at. And that'll make them by far the most valuable company ever.
Yeah.
And the big story in global finance will be strategy playing that out, but also all the other Bitcoin Treasury companies that make up the other half of that 140 trillion. And I think Smarter Web is going to be one of them. I think there's going to be a leading Bitcoin Treasury company in every capital market in the world. And those Bitcoin Treasury companies will end up evolving into something like strategy is today in terms of their product offerings and how they're going about tapping into capital. The fixed income market is the big behemoth. Mm-hmm. It's the real reason that I think the real reason that Saylor uses my chart a lot is because it's a map. And I didn't intend it to be this when I made it, but it's a map of where all the value in the world sits, and it shows you how big the opportunity is if you can tap into the analog capital that's trapped in each of these buckets and offer it a better value proposition that's powered by Bitcoin. This is how much capital there is to siphon away, right? And the big one there is, well, real estate, but the fixed income market. And given the context of, a huge portion of bondholders in real inflation terms, so not CPI, but M2 growth, are losing money, losing value every year that they sit in bonds. And Saylor likes to point that out, and he uses that chart to kind of tee that up of like, here's the real opportunity. The fuel source for my company over the next 20 years is going to be, us strategy going to fixed income investors and saying, forget about your 5% holding government debt that's no longer top tier credit risk. Instead, my company that's better collateralized than the U.S. government is going to offer you 9%, and you're going to make an actual positive return if you reallocate your capital from traditional bonds to these Bitcoin powered fixed income instruments, these preferred equities.
Yeah.
So that story is going to play out everywhere in every capital market in the world. And there's going to be a local hero, homegrown heroes that are plugged into the capital market fabric and regulatory frameworks of that jurisdiction, and are best positioned to create that value proposition for fixed income investors in those jurisdictions. So that's what Smarter Web is, that's what we're focused on growing into, is becoming that balance sheet that's big enough in the UK to be that strategy-like entity in the UK.
Yeah, let's go deep on that, because what is Smarter Web doing specifically to become the MicroStrategy of the United Kingdom?
Yeah, it's really exciting times right now, because it's a pretty simple pathway that has now been a trail that's been blazed by Strategy, and now by MetaPlanet, in sort of two different life cycle stages. Like Strategy, MicroStrategy showed up at a multi-billion-dollar valuation in 2020, and has only grown from there, right? And so for the last 5 years, it wasn't really clear how if it was possible to start from scratch and become a Bitcoin Treasury company. And then MetaPlanet blazed the trail for that early stage. How do you grow from zero value to a few $1 billion of value, which is what Strategy never had to show. They started at that point. And so MetaPlanet's playbook has been, their success story has been incredible. Those are the two most, the two companies that I think deserve the most credit, and are the most interesting stories in the public equity landscape globally right now. And I think, a lot of people will study them in the future, and not a ton of people do now, which is wild to me.
Yeah, I agree. But on MetaPlanet specifically, how much do you think their success was, can be attributed to the fact that Japan has a really severely damaged bond market? They had these bad tax laws against Bitcoin that made self-custody very unfeasible for many people. They definitely benefited from idiosyncrasies in the Japanese market specifically. Do you think that was, the primary catalyst? And is there something of that sorts available in the United Kingdom that Smarter Web may be able to take advantage of?
Yeah, absolutely. Great questions. So Strategy kind of showed how you grow, but there was this question of is it possible to start from nothing? and do it. And basically people assumed you couldn't. You needed to be in Strategy's position, and you needed to have their sort of idiosyncratic benefits, which was really being a cash cow software business so that you could service your debt and run the strategy. But then MetaPlanet did it, right? Then MetaPlanet started from nothing and figured out a pathway that worked, focused largely on issuing equity, and running that flywheel strategy of if you can accretively issue equity to buy Bitcoin, you then justify a premium, which is what's necessary for that strategy to keep running, and you get a flywheel effect, and you can rapidly compound that into what they've done over the last 16 months, which is grow from $10 million valuation to owning 20,000 Bitcoin, and being worth, I don't know what it is now, 5 billion, 10 billion, something like that. Mm-hmm. And so now, having seen the success of Strategy and now MetaPlanet, I think people assume, well, you need to be MetaPlanet. You need to have the certain idiosyncratic benefits of the Japanese context in order for it to work, and specifically the tax treatment for Bitcoin for companies versus individuals, and also the sovereign debt context of Japan. And I think it's just a repeat of the same assumption with Strategy of people assume that you have to be exactly that in order for it to work. But I think the reality is, and we're sort of proving it with SmarterWeb and the emerging success of other Bitcoin Treasury companies in other capital markets, is that you just need some set of benefits, some tailwinds for your local jurisdiction, in order to generate a narrative of like, here's why this is attractive to investors, and to attract that capital and support and generate that investor base, and then execute on the strategy. So it's a combination of there being a need, and then you executing on that opportunity in order to generate further interest and get that flywheel moving and keep it moving. Mm-hmm. And so I think that's what we're doing in the UK with SmarterWeb. In the UK, it's the tailwinds that probably the biggest tailwind is that retirement account money has not had access to Bitcoin, because the FCA, the SEC of the UK, hasn't allowed that. And now they're going to be allowing that through
so
Bitcoin
no
ETNs.
ETF there in the UK?
There hasn't been. And there's about to be Bitcoin ETNs, which is slightly inferior product to an ETF, but same idea of indexing to Bitcoin's price. And funny enough, that's probably a good thing for SmarterWeb. We think, we're pretty confident it is a good thing, mm-hmm. because when you look at the US context, 18 months ago, the Bitcoin ETFs came online in the US, and you sort of assumed that MicroStrategy would not benefit from that, because now you could just get exposure through an ETF. So why would I get this proxy exposure by buying this stock? But the opposite happened, where Strategy became the disproportionate beneficiary of that regulatory clarity, that Bitcoin is now acceptable in portfolios, and it's not going to be persecuted by regulators, and that's kind of greenlit. Like, okay, yeah, go get your Bitcoin exposure, but you might as well not centralize your coins in just a static ETF. If you're gonna get exposure to Bitcoin on the stock market, you might want to get MicroStrategy, whose entire business plan and design is centers around growing your Bitcoin ownership over time. And we've seen how well they've done over the last 18 months in that context. And I think the same is going to play out in the UK with Bitcoin ETNs coming online soon. I think SmarterWeb might end up being the greatest beneficiary of that increased regulatory clarity in the UK.
Yeah, that makes sense. And I remember that narrative going around right before the ETFs passed. It was like, this is doomsday for MicroStrategy. Nobody's going to want to own it anymore. And as it turns out, creating more vehicles for people to get Bitcoin exposure, cause the Bitcoin price to go up, which caused strategy to benefit regardless. And you bring up a good point, and Saylor does a great job articulating this, which is don't own the ETF when you can own a company or a security that's going to accumulate more Bitcoin beyond just the initial allocation. And so I think, yeah, that's exciting to hear Smarter Web may be kind of benefiting from similar tailwinds going forward.
Yeah, and the current context is especially strong in terms of that because we're still small, and that allows us to deliver a lot of Bitcoin yield per unit of time. Over the last 5 weeks, might be a little over 5 weeks now, we've added plus 28% Bitcoin per share, which is interesting because at the moment our MNAV, I actually don't know today, but as of yesterday, it was 1.6, meaning that the market was pricing in that we would only ever grow Bitcoin per share by 60% ever, going forward. But in the last month, we've done half of that. And that was during this sort of bear market for Bitcoin Treasury Companies. And, we're quite confident that we have the infrastructure in place to keep delivering, maybe not exactly that amount every month, but pretty darn good every month. And that will compound into the future. So I think the recent pullback in Bitcoin Treasury Company MNAV valuations is I think, first of all, I think it's temporary, as we've seen with MetaPlanet over the last 16 months. But secondly, I think it creates quite an opportunity for people who are willing to engage with that math and try to understand, okay, what's the value proposition here, and how do I personally value a company that is able to deliver double-digit increases percentage-wise in Bitcoin per share every month, and is that higher than 1.7x?
What do you think generally about this relationship between Bitcoin, the Bitcoin price, and Bitcoin Treasury Companies? Because you're right, we've seen the Bitcoin Treasury Companies kind of dip off the highs from May, June timeframe, and I actually interviewed Joe Burnett yesterday. I asked him the same question, and he pointed out, you could see capital rotation because when the Bitcoin Treasury Companies get bid up, well, they have a huge premium to ARB, and then they buy Bitcoin with that. And so you might see kind of ebbs and flows between the Treasury Companies and Bitcoin. And do you think this could be the new cycle instead of the traditional 4-year halving cycle?
Yeah, I think it's going to be really interesting what happens, over the next year, really. I've been a big proponent of the 4-year cycle based on the halvings, and I still think that diminishes every 4 years because of the halving. Size relative to total circulating supply diminishes, but the psychological effects are still there. However, that sort of traditional force, I think, butts up against what we're seeing in Bitcoin Treasury Companies. In the MetaPlanet example, in the last 16 months, they've had something like 4 sort of cycles, right? Like classic boom bust cycles, like Bitcoin has had over its 16-year history. Mm-hmm. And so in that sense, MetaPlanet is having cycles at a 12x faster rate. And that's makes sense because, they're accumulating Bitcoin so rapidly that the market doesn't have time to slowly digest this. Like the NAV floor, the value of their Bitcoin increases so quickly that there's not much time to process the most recent boom. And so I think, that's just volatility playing out, and Bitcoin Treasury Companies are Bitcoin volatility squared, basically.
Yeah.
So that creates like this interesting opposing force of like cycles happening on a 4-month time scale. And that's going to clash with the 4-year mechanics that are still there. And we're going to see like what kind of weird outcome results from that. I wouldn't be surprised if we basically don't have any discernible 4-year cycle. I also would not be surprised if we have a 70% drawdown and a classic 4-year cycle. But I think probably something in between, some weird combination of these two forces is how it'll most likely play out. And one won't dominate the other, but they'll sort of intermingle in some new and novel way. We'll see.
Yeah, I think it's a rational take. I'm pretty firmly in the camp that we're not going to have any more 75% drawdowns, and I may have to hear myself in a clip, a year or two from now after it may have happened, and have to deal with that. But just given all of these passive flows, and like you mentioned, the diminishing marginal impact of the halving, I really doubt Bitcoin drops 75%. The only scenario I reasonably think that could occur is if we go to 1 million in the next like 3 or 4 months. Then yeah, you could dip down to 250K, but at that point I think I'd be overall pleased with that.
Yeah, definitely agree.
Yeah, one thing too, global M2. You mentioned M2 earlier on the episode. The kind of correlation there, it gets mocked on Twitter because it goes viral frequently. We're seeing it break down. How do you think about this relationship between fiat liquidity and specifically this global M2 and Bitcoin chart?
Yeah, that it's too good to be true. It's kind of my gut take there. It's like that chart you're referring to is this like really clean fractal of lining up the sort of, I don't know what it is, like the last year or so of maybe it's a few years of M2 supply having a dip right when Bitcoin had a dip, or I guess staggered by 90 days or something. And then resumption of the up and to the right has cleanly tracked Bitcoin's resumption of the same, but it's just got to be temporary. Obviously, I think that they're related in the grand scheme. As the amount of money increases, the denominator for how much every unit of value in the world is quote unquote worth increases. So it tracks in that sense. But it wouldn't make sense for this hyper monetizing thing to so cleanly track the slow moving top level amount of money in the world. It's going to have its own gyrations along the way.
Yeah. It was always funny seeing it, every now and then. It did seem like it was following, but then over the last couple months, it totally broke down. And one more thing I wanted to talk about in terms of the total addressable market is the real estate bucket, because that is the biggest one, but it seems to me to be the least tapped one right now. How do you expect Bitcoin to demonetize that, or does it happen at all? Because the argument would be, you have a lot of investors buying real estate just because they want to save, but then on the other side, you can say rich people are always going to want to own multiple properties. So do you think that market could, over time, Bitcoin could capture a good chunk of that? And what would you envision? Like, how would you envision that happening?
Yeah. An example comes to mind. I know somebody who owns hundreds of units in an American city, and they've become a Bitcoiner, and they're constantly thinking about, do I really want to keep holding this stuff, or should I keep trimming my real estate portfolio and put that money into Bitcoin, because that Bitcoin causes me fewer headaches, has less carrying costs to it, and it outperforms. And so like inevitably that as your conviction grows in Bitcoin, you end up allocating more and more of your real estate portfolio to Bitcoin. And so that's how that manifests as investors shifting their allocation from real estate into Bitcoin. Obviously, there's still utility of a family owning one home, or even a family owning 2 or 3 homes, right, for vacations. But investment portfolios, that's where you would see that reallocation of capital happening, which would, in theory, free up supply for families to have to compete for, against fewer bidders, less capital bidding for homes, and you would see that kind of relative valuation of all real estate shrink, relative to everything else, and especially relative to Bitcoin. And so that, I think that's the trajectory by which it happens. I do think about how or when Strategy or other Bitcoin Treasury companies will figure out how to create a product to appeal to real estate capital. And I don't know what that looks like, but I have a feeling they'll come up with something. It's probably just like the trickiest thing to do, and the least like turnkey. There's a lot of there's a lot of mess and a lot of red tape, I think, and it's lumpy capital too. Because it's tied up in these idiosyncratic deals, right? They all have their specific terms and conditions and whatever. So, but I think that, there's an opportunity there for a well-capitalized Bitcoin treasury company, once it has kind of plucked the low-hanging fruits in the fixed income market, to potentially come up with a killer value proposition to, maybe it's something like, we pay your mortgage, but you give us the dollars and we buy Bitcoin. I don't know how that would work, and mortgage companies would probably have covenants against that, but they could insert themselves in some way in that value chain, by promising to pay the mortgage expense, but taking those dollars and buying Bitcoin with them, which is the same idea as what's happening with the fixed income instruments. So we'll see, but at minimum, it happens osmotically through individual investors waking up and saying, screw being a landlord. I'd rather just hold Bitcoin because it's going to do better and it's less headaches.
Yeah, that makes sense. I think, unfortunately, right now the mortgage industry is just covered in too much red tape for them to get creative with something like that. I think it would be great if you could put some kind of dual collateral, put some Bitcoin in the mortgage, and the lender partakes on the upside, and so you kind of funnel Bitcoin through that way. I actually think the most reasonable product would be Bitcoin mining. So real estate investors, a big thing for them is tax write-offs and free cash flows. And the new guidelines from the Big Beautiful Bill allow you to write off 100% of the CapEx on ASICs. So you can write off every dollar you spend, plus you're getting cash flow, which real estate investors want, and you're getting Bitcoin upside because, of course, you're mining the Bitcoin. So I think that's actually that's the killer product for tapping into that market specifically, in my opinion.
Yeah, hopefully that happens.
Yeah, absolutely. I've got one more question for you here before we wrap up. A few years ago, you had a very viral article titled "Why the Yuppie Elite Dismiss Bitcoin." Now it's 2025. The president owns Bitcoin. Larry Fink advocates for Bitcoin. Ray Dalio, all these guys. Are the yuppie elite still dismissing Bitcoin in 2025?
Yeah, pretty much. Yeah, I mean, I think that I reread that recently, like a month ago, and it rang just as true. Now there's a little bit less of that was 5 years ago, almost exactly. And when I wrote that, like, my Stanford MBA friends basically thought I was crazy for saying, like, Bitcoin is it. Bitcoin's where it's at right now. And now they certainly don't think that. They think some mixture of, oh, Jesse got lucky, or damn, he was right. Oh well, and all of them, no matter how they feel about it, they think, shoot, I missed it. So ultimately it's the same dynamic, and now it's just like, it's maybe shifted from that's crazy to I missed out, but I'm still, there's no reason for me to invest in it now. So that has softened quite a bit. But ultimately the same sort of mechanics of like, it's outside of what they've been taught, and it's outside of what they've invested in. It's outside of what all of, well-heeled, educated yuppies groupthink believe. And so it continues to be written off as like, something that happened that they missed out on, but it's not, why would it ever change the world going forward? Though I think they'll be a little less surprised. They would be a little less surprised now if you were to say, 20 years from now, it has changed the world. Mm-hmm. At the start of that article, I asked one of my smartest MBA friends, what's the probability that Bitcoin goes to $1 million per coin? And he said something like, 0.001%. And then I saw him at a wedding a couple years later, and Bitcoin was up at like 25,000 at that point. I wrote this at 6,000 Bitcoin, per dollars per Bitcoin, and so it had like 4x or something. But it was on the way down at that point in time. And I asked him the same question, and he said, and he didn't remember that I had ever asked them this before, and he said 0.1%. Right, so his own mental math had shifted, 2 orders of magnitude, but he still didn't believe in it. But there's a little hint there of like, it's a little less crazy now. And that was a few years ago. I kind of wonder what he would say now.
Yeah, well, you would think he would say at least 10%, because that's what the market prices it at right now at 110K. Yeah, it's 10% chance we get to $1 million. But
yeah, or it's it's a 1% chance we get to 10 million. And that's how the market's pricing it, which is sort of how I would view it. But I don't think it's a 1% chance. I think it's an 80% chance.
Yeah, no, I think it's 100% chance. Maybe I'll be the clown to say it, because from your 1 quadrillion map there, Bitcoin needs what, 2, 3, 4, 5% of that to reach a $10 million price. I don't know the napkin math off the top of my head, but it's not as much as one might think.
Yeah, no, that's the power of that framework, the full potential valuation article, which people can go and find on onceinaSpecies.com. But it just kind of tees up like how big do you think digital value will be in the world as a percentage of the total, and even without factoring in monetary inflation going forward, it's a lot more than 0.2%. And however big you think it'll be, run the numbers and you'll find that you're very bullish about Bitcoin.
Absolutely. Well, Jesse, I appreciate you taking the time to come on the show. Do you have any final thoughts or anywhere you want to send the audience?
No, this was great. If people want to learn more about Smarter Web, you can check out our website, smarterwebcompany.co.uk, and check out our analytics dashboard in particular. Go to the investor information thing in the top right. And that shows all of our Bitcoin Treasury analytics to date. And you can see some of those graphs show our fundamentals, and they are marching up and to the right. And some of those graphs show the recent market sentiment, share price and MNAV. And those have recently gone down and to the right. And I think just looking at those numbers helps present a pretty compelling case for what may come next.
Yeah, I think those are pretty solid indicators of a local bottom. Well, thank you, Jesse. I appreciate you taking the time to come on the show.
Thank you, Mitch.